Hello. Hello. Okay, quickly to the point. Um, Interesting dynamic is currently happening when the data is coming in real bad. Once again, the quad 4 data, deflationary environment, deflation, slowing inflation and slowing growth, and growth is slowing and will continue to slow faster than consensus realizes, as we've been saying over and over and over. And during that time, stocks are rallying. So whilst we're pricing in more cuts on the back of horrendous fundamental data, very counterintuitive, but well, it is how it is. Quickly through the interesting points. Yeah, we had a horrible GDP report, but at the same time, US 30-year closed up on the day, almost a couple basis points, a couple dozens of basis points. That's nice. That's a good thing to see. Uh, we're just waiting here with rates. No major decisions, just waiting. The name of the game right now, obviously, is SPY, and as we've said multiple times, that this is the time to buy the dips on a trending and trading on a trading basis. With this is where we are. Calling for this to happen, calling to buy this low, move higher, and once again, since the beginning of this week, we were saying that even if we fall lower into 540, 535, you buy into that. And this is what we had today. You had the horrendous GDP report, on which we fell down, fell lower, fell into the full hourly time frame, but low. But once again, as we've been saying, we broke this trade high. We made the higher low on a trading basis, so we can break the full hourly. We break it, you buy into that. And we've just right now created a trading higher low. This is what we've been waiting for. This gives us structure and context. And once again, as I keep saying, I believe we're going back into 580. And from there, we will make decisions based on whatever it is based on. If we want to short this thing lower. But right now, positive momentum continues, move higher, just moving higher. That's it. Same thing with, once again, HYG, as we've been saying in the last video that I made, that positive on a trading basis, buying dips, and right now we haven't yet created a trading higher low or lower high, or higher low meaning on the in HYG, akin to something like, we need to create something like this. We need to create something like this, after which we break it and we establish trending lower high. So far, we haven't done this yet. So, still patiently waiting for this to happen. And HYG, I believe, will be the signal, the ultimate signal, whether you want to be short stocks on the back of rising yields. But right now, we don't have rising yields, and we have decelerating economy, falling yields, and stocks are rising anyway. So that's, once again, as I said, counterintuitive. This all happened. This snapback reaction. First of all, it's just flow, just mindless flow. That's it. What else I can say to you? If you want to play this based on macro or fundamentals or anything like that, the data is horrible. GDP is horrible. Everything is decelerating. Why the fuck are you long equities? You're long equities because the flow says so, because the signal says so. Pretty simple. The catalyst that made this thing to snap back as it did was the earnings. It was the Microsoft earnings, Meta earnings, and Hood earnings. Mostly Microsoft earnings. Pretty good earnings from Microsoft. Monstrous reaction from it. Absolutely monstrous reaction from Microsoft. Very good, very well. And by the way, Microsoft shifted trend. It was really interesting the way we traded, because we were coming into the trend and we were so close to the trend and closing before the trend and before this massive level. Ultimately, on the good earnings, we did break it. So that's okay. I'm absolutely certain that on the open you should be shorting this, because we will get some sort of a pullback right at the open, as we did right here in Apple. Massive move higher on good news, and then retracement within the intraday retracement. But that's it. MSFT earnings pulled up everything else nicely, and once again, earnings should be okay. So this reaction, these earnings, this reaction tells us that we are not going into recession. Nowhere near. We are nowhere near, and we are not going into recession, because the corporate profit cycle is not gonna break. It's gonna slow down, but it's not breaking, and it's Beautiful. What does that mean? This means that we are not going into recession. This means that inflation is not going to be breaking down materially without a recession. Therefore, the Q3 outlook for recession to reaccelerate and be sticky still remains. And plus, once again, the next refunding announcement that we received, we've received it today as well. TBAC final announcement, and this is what they are projecting. They're gonna borrow. It should be somewhere in here. Have I made a mistake? Yeah, it's right here. As we've said, this is going to be a non-event because once again they're not issuing anything. There is no pressure from the supply side for bonds, none at all. Implied bill funding for the current and next quarters based on the recent borrowing estimates. Sources of privately held financing year 25. And Treasury announced net marketable borrowing for what is it? April and June for this quarter, April to June. 514 billion they're gonna borrow. Out of all of this, they're gonna borrow net coupon issuance 507 billion. So they're issuing a shit. I mean, not the totality. I mean, not in the nominal numbers, but relative once again to bills. Look at the bills correlation ratio to bills. Very little bills, a lot of coupon issuance. What they are projecting for the upcoming quarter, this important quarter, July, September, right now, and they cannot say or project otherwise, but what will happen is they will have to, as we've said, they will have to borrow $600-700 billion more than they are projecting here. And we shall see how it's, once again, we know how the bond market is going to react to this, but it will be interesting how they're going to shift that issuance around and how much of it they're going to make it in bonds and in bills. But this is, it's incorrect. It's going to be upwards of trillion, maybe $1.5 trillion in here in issuance, more than they anticipating right now. And once again, this is why we're calling for this move in bond market to happen anyway. Yep. That's pretty simple, pretty clear. Once again, pricing in more cuts. We have ISMs tomorrow. We have NFP print tomorrow. Day after tomorrow on Friday, and everything should be aligning with more cuts and decelerating movements in the economy. But not recessionary conditions. It's a similar set that we have currently is that the oil is breaking down on a trending basis, created beautiful trend, lower high. One of the most important signals that we've received this week is oil ultimately did retrace it. This move, we're saying that once again, in this retracement, we are likely to create a trending lower high, which we did. And now we move in lower, and most likely we will move lower into 55 and ultimately into 50s. 55 makes a lot of sense in the short term. This is nice. This is good. This is good for inflation prints, but this is the similar set in terms of the activity is slowing. So we are right in pricing in more cuts. The 2 year should be breaking down lower. Makes sense. HYG is also bearish trend. Most of the commodity complex is also bearish trend. Dixie is once again very hard to trade Dixie because usually you trade it on a interest rate differential, and the correlation of Dixie to the 2 year yield is upwards of 85 plus 90%. It's almost 1-to-1 the correlation in between them, and it was pretty simple, pretty easy to trade these things. Well, ultimately, especially on a trending basis, higher move yields higher, dollar higher, yields lower, dollar lower, higher, lower. This what happened here was the extension, and this was perpetuated and made exacerbated by the outflow of capital from the US. We thought this was going to happen on the back of spiking yields and the fiscal problems with the Treasury, and the fact that the Treasury at some point will have to, once again, they are already engaged in a YCD yield curve distortions. They will maybe at some point will engage in explicit yield curve control, but God knows. The point being that once again the fiscal problems will break the back of the dollar, but Trump essentially pulled this event forward by the tariffs and made the outflow of capital even worse and faster. So once again, announced tariffs, move them lower, massive moves lower, and This is not something that's going to be reversed. We're not going to get mean reversion in here. Everything points to lower dollar. And ultimately, I believe, once again, the 2-year yield is currently, we're pricing in more and more and more cuts, but on a trading basis, and we've seen this over and over and over again throughout this period. Look here. 2-year yield is breaking down. We're pricing in more and more cuts, pricing in recessionary conditions, slower growth, and dollar is moving higher, especially into these 3 days, moving higher and then breaking down monstrously. We're pricing in 2-year yield starts to break down first, move lower, and only here, after the tariffs were announced, we continue lower. Right here, same thing, breaking down monstrously, significant expansion on a trending basis in 2-year yield lower. We are currently observing Dixie is printing higher on the day, and once again, this move in Dixie should be faded, for the simple reason that this tariff process that was initiated, even if they come out today and once again make a deal with China and tariffs are back to zero, the best case scenario for Dixie is already priced in. We might get a move into 100, 101 at some point, and that's it. And you want to be selling into this because we will continuously over the next week, 2, 3, 4 weeks price in more and more cuts because the data will be coming in worse and worse. That's it. And ultimately, this thing will break lower. And that's the idea, yeah. So if we do get into 100, maybe 101 in Dixie, if it will be perpetuated, you should be betting on, you should be shorting Dixie regardless. And JPY is probably the way to do this. Euro USD as well. Yeah, so this thing is going lower. Yeah, that's pretty clear. This thing should retrace, preferably once again within a positive trend momentum and trade momentum. You want to be buying low end on a trade basis, any dips on the trade basis, and we've seen what the gold did right now. It fell into the 4-hourly and consolidated into this. It would be very nice for it to break lower. What can be the catalyst for it is Federal Reserve being hawkish in the face of this catastrophically bad data. And what can be the catalyst for the dollar to go higher from here is once again Federal Reserve being hawkish in the face of all of this data. But ultimately, you want to be selling into this regardless. So if that indeed happens, this will constitute a very nice selling opportunity. As well as with gold, the same thing. If it falls into, as we've been calling, 3,200, preferably 3,100, you want to be buying into this. And silver as well. So yeah, that's it at this point. What's next? Once again, we've been calling for this expansionary move in equities, and we should get it. And I believe equities are going to be strong going into June and in June as well. And then this will be a consolidation period to some degree. And then starting from August, we should start be breaking down. But it's literally months ahead. So we should not be rushing anything. Currently, on a trending basis, I honestly, as of now, I do not understand how these problems will be resolved, and I can envision the option of where we are revisiting 480 and moving lower into 400 on SPY. I can envision this. The only way that it is going to happen is the problems with long-term yields will be so severe, we will move so fast, so high, and they will not provide liquidity that it will easily drag us into 400, 450, 400 on SPY. Is this the most likely scenario? I don't know. No, I don't think so at this point. But once again, what do I know? The more modest scenario once again is if we do retest 580, and then from here we will go back to 530, 520, maybe 510 again, and from it we will continuously reaccelerate. That's the I would say the base case scenario at this point, but it's not what we should be focusing on. It's too far away. What I know is, regardless of what happens, you should be buying dips in Bitcoin for the simple reason that Bitcoin is even if we might have interpreted move in the TLT to some degree incorrectly, because the monthly candle is closing, by the way, it's 30th of April, we are closing the monthly candle here, and we're closing above the previous tail right here. I do not think it's reasonable to assume that this is a run on tail and from here we move higher. We're still negative trend, but positive trade and neutral tail, I would say, like really neutral tail. And once again, I still believe that we are in this, and this is what the signal is essentially saying. In these this type of environment, we from here, from May upwards up until July 24th, we should be in a consolidation in here. So this is what awaits us, is this horrible, just horrible summer. I mean, the next 2 months going to be fucking disastrous if you want to be betting directionally. But when the time comes, the initiation of this move should be this. That's, once again, this is where the next move in equities is coming from, and everything else. Waiting more upside in stocks, as I'm saying, more upside, and yep, that's about it. In terms of trades, we still have Lilly, MA, MCD, Amazon, Apple reporting on Thursday. Once again, will it be the market as market moving as Microsoft is? I don't think so. We priced in a lot of rebound, a lot of already priced in, and I have no idea, honestly. So most of the trades has already happened. This dip, you should be buying into this, and the next move, I believe, is not to get long of this stuff and waiting for move higher, but sit patiently and wait for the trending short in equities to start forming in and around these levels, in and around this region, and then targeting minimum targeting 5,300 on SPX minimum. That's the idea. That's general idea. And I guess this is it. As of now, this is it. We shall see how we're going to be trading into NFP, and we are pretty overextended on everything going into the NFP, pricing in a lot of cuts, and NFP will come in bad, but is it going to be so bad that it justifies this type of movement in SOFR contracts? I don't know. Maybe not as of now. Plus, especially looking at how stocks are moving right now. And there we go. This is what we have currently.